Half an hour away from the opens in Hong Kong, Shenzhen, and Shanghai. You're watching The China Show. I'm Yvonne Man with David Ingles.
Good morning. Let's get to your top stories today. Stocks across the Asia Pacific down and down a lot. Korea leading these declines on concerns about elevated valuations. You have top executives warning investors to prepare for a pullback.
AMD falling in extended trade after its revenue forecast fails to meet those lofty expectations.
And also had Chinese luxury car maker Series is set to debut here in Hong Kong this hour after raising $1.8 billion in its IPO. We hear exclusively from the company's president, Zhang.
And I'm Stephen Engel in Shanghai, where the China International Import Expo, also known as the CIIE, begins today as China seeks to attract more foreign investors and import more to rebalance its economy. Premier Qiang expected to address the gathering.
Okay, yeah, check this out, Yvonne. So it's one of those days where people will need to take a break to just breathe in. In this part of the world, it's like exhaling through your mouth. That's exactly what we're seeing. It's that kind of session right now. In fact, the open in Korea right now, 4.6% to the downside. Worst day currently on price itself, going back to Liberation Day. We're looking specifically as well at a lot of these levered single stock ETFs traded here in Hong Kong. So you had the likes of Korea, for example, like Samsung Electronics and SK Hynix. I expect those to come under tremendous pressure today. We're down about 2% as far as the Taiwan Open is concerned amid this tech rout that we are seeing right now. And who would have thought 1,400 points, 50,000 to the downside right now is perhaps the next level to watch there. All right. Is it playing out? It's certainly playing out across equity markets, but as you can see, further declines in the U.S. futures. Is it playing out across equity in currency markets as well? Last we checked, not that much, but we are looking at many of these things. It's also quite a busy macro day as far as data is concerned. We're getting some inflation prints coming through out of the Philippines. Many parts of Southeast Asia are releasing some numbers coming through. On top of that, we also have some services PMI numbers coming out of mainland China in a moment there this hour. Okay. Very briefly, let's have a look at how it's playing out across some of the momentum plays cross asset, the likes of gold. Crypto is in fact set for its second worst week in about 2 or 3 years. We are seeing a little bit of upside there, but we did dip below that 100,000 level in Bitcoin. Gold futures are continuing to see some pressure right now. So we are in the midst of this adjustment lower as we speak. The approach to the open today, A50 futures, let's get that up, please, if we can. There's a 50-year bond auction today, 20 billion renminbi. Just watch it very closely as well. And as you can see, we are called substantially lower right now, 0.5% on A50 futures. Dollar China, as you can see, flat. But yes, we are looking at a lot of these support levels as well. Hang Seng Tech yesterday, it's worth pointing out. I'll show you a chart later on. We closed below this trend line support, which had held up decently. But we'll see what happens today, given all the pressure we're seeing across these markets, Yvonne.
Yeah, we might see some follow-through here on some of these Chinese tech names. But it's interesting, right? I think when the Korean Exchange on Monday already talked about this investment caution around SK Hynix, which is quite rare itself, already having that sort of warning around its stock, I think that was already a pretty telling signal of maybe things are looking a little bit too frothy here. You add that to, surprisingly, these comments, which I thought, when we were at HKMA, from the likes of David Solomon from Goldman Sachs, from Ted Pick, from Morgan Stanley, about a 10 to 20% correction on equity markets is quite healthy, and we're ripe for some sort of correction. I didn't think it was that surprising when I first saw that.
And then things happen.
But the fact that these Wall Street banks are now talking about it specifically, I think that was what really was the trigger. Yeah,
I mean, people were itching for a reason anyway to unwind some of these things as well. So far what we're seeing is really the big winner so far, momentum and growth. I think we have a graphic that actually shows you this too, and we'll show you those. We'll play those sound bites in a moment. But going into the session today, it was really where you had the big tech, AI, semiconductors, and globally we did some data crunching in the last few minutes or so. So in terms of factor investing, look at this. So liquidity, growth, and momentum, some of the worst winners. And I imagine these numbers have updated since the open in Taiwan. So we'll get you guys updated numbers. But just to show you the major themes going into today is really this risk off, this pivot out of these big winners, out of the big momentum plays, liquidity plays, and I'm really curious to see what happens here in Hong Kong when things reopen, particularly those ETFs, of course.
Yeah, and what we heard in the Rosewood yesterday, right, in that ballroom, was that panel with Goldman Sachs, with Morgan Stanley. Let's listen in on really what we heard from yesterday first.
Of course, it is likely there'll be, a 10 to 20% drawdown in equity markets sometime in the next 12 to 24 months.
On the near-term valuation side, there's some challenges.
We should also welcome the possibility that there would be drawdowns, 10 to 15% drawdowns that are not driven by some sort of macro cliff effect.
Yeah, so that's the macro overlay. Specifically after that, I think Jenny Johnson of Franklin Templeton was at that panel. Right after those comments, she stepped out into our set right outside that ballroom, and we asked her, so to you, what was the biggest risk? And she was very, very specific about the signs of maybe retail investor frenzy. Let's have a listen to how she phrased that answer.
I always say you have to separate the market from the economy. I'm very bullish on the economy. I think there's a lot of good positive things going on there. But the market's been a bit one-sided. It's all been about these large cap growth. It's mostly been sort of 6 stocks. But when you have now adding this kind of levered ETFs that are focused on that concentration, that's where I think you're going to get volatility and you could have a correction.
Yeah, so we'll watch that. I mean, especially with these ETFs in Hong Kong that track Korea. I mean, they might actually see a bit of a drawdown here today if, in fact, we can continue what we're seeing on the Kospi. But, yeah, sidecar has been triggered. We'll give you an update once we hear a bit more there as well. Let's bring in Ekaterina Bigos, AXA Investment Managers and Core Investment CIO for Asia ex-Japan. What do I make with the sell-off? I mean, can it build in some ways? Or, how should I be looking at risk into the end of the year now?
Look, I mean, I think there's a fair to say that the valuations are stretching. Everybody was talking about it. I think there's an element of chasing that rally, but it was supported by fundamentals. So we've had obviously earnings delivering. The investment that has been deployed from earnings, has been deployed from stronger capital and cash flows that those companies had. And also, I think that one point to say is, as much as people talk about the concentrated rally in those magnificent 7, or at least not 7, some of them lagged, of course, not to forget that the story was about investing in tech, but now it's becoming tech investing in everything. So tech is starting to invest in the deployment of that AI story. And when you look at the rally and you look into smaller cap companies, there's a lot of smaller cap companies that are providing and facilitating the infrastructure build for AI, whatever that's cooling systems, batteries, whatever that's electricity, grids, So all of those are part of that narrative. So yeah, as much as people pay attention to those large cap companies because they are the forefront of deploying the capital, not to forget that there's a lot of beneficiaries in the U.S. economy and in the globe, of course. We know some of the beneficiaries, Korea and Japan, that have benefited as part of that narrative of deploying into AI. So.
No, go ahead. Finish your thought.
So clearly the theme is here to stay.
Okay.
I mean, of course, but there's questions around, the timing, the revenue, the scale, the expectations as well. And I think AMD yesterday, I think it was expectations, not that the company didn't deliver. It was just expectations were quite...
were too high. Yeah, I was actually looking at the numbers before I read the story, and it did seem the numbers looked okay, but then the expectations were almost subjective at that point. So my question is, the next few hours or the next few days, while the fundamental story seems solid, market mechanics seem to be getting ahead and really driving things down. Is this a buying opportunity, or do I wait this out for a couple of days?
Look, I think ultimately people have to say, what is my time horizon? And longer-term stories for tech, I think, is intact. I think people, if you look at all the deployment of capital, the intentions of growth, not just in the U.S., but you look at China, you look in Japan, somewhat to Europe as well. One word that comes out is technological advancement. And part of that is certainly AI is part of it. So the story is there. The story is happening. Now, what is the catalyst for some of the recovery and quicker recovery? Clearly, market are watching first evaluations, some indications of potential revenue crystallization on some investment. But importantly for U.S., we're looking at the Fed. So Fed has been part of the narrative of why we've seen that correction to some degree. People are concerned is, will the Fed cut in December? And, of course, at the meeting that they've had last week, they put it into balance. It wasn't kind of a clear guidance that they're actually going to do it, right?
And given there were so many questions even at the HKMA about concentration risk, I mean, how do I look at positioning around, as you say, these themes now? Or do you think this rally can actually broaden out? I think we've been waiting for that for some time, all year now.
I do think that it's broadened, as I said, by default, because the indices have focused on market cap, and obviously the big sevens are kind of the larger. But the broadening in the sphere of tech has happened. As I said, there's smaller companies that are supplying to that building of AI, and as I said, from whatever that's electricity, grid batteries, even some of the semiconductors. So it is broadening, but it hasn't broadened across all sectors.
Yes.
And I think the bigger question is that when will in the U.S. particularly broaden across sectors is certainly a question about the Fed, because of course we need to see the funding or the ability of companies to borrow, and we know the smaller cap companies tend to lean more on borrowing to deploy into growth. They have less free cash flow to deploy. So certainly the Fed moving will be important. But one important to say about the U.S. in particular, and I think where the catalyst for growth in tech is, they're already there. So we've had CHIP Act, which was obviously during the Biden administration, which already has put a basis to that growth in AI. Then we've had the One Big Beautiful Bill, which, not to forget, they allow companies to amortize some of the capital investment in R&D upfront, right? So I think that's happening. And then we have FDI flows. We have private company hyperscalers deploying into this, right? So there's a lot of built out where the attention and the capital is getting channeled into that sphere. As I said, there's amount of volatility that will happen, but is the story not there? Is definitely there, and I think there's just a moment of kind of reassessing where we are in that development of the tech of AI story.
The outside of, I think, today's, let's call it disturbance. Let's call it disturbance. We almost forgot that there was this big meeting last week, and it seems that the geopolitical temperature's been brought down. How much risk premium do you think that's removed from the market, and does that help at all?
No, I think that helps. But if you look at the reaction, particularly for China, it was quite muted, right? So because I think the trade tensions has become more of a trend rather than a shock, right? I think the shock was in April. We had a few bounds of volatility. But it's become a little bit more trend. People are expecting that, I think China and the US are in a stage of this competitive stage where they've come to a resolution, but they still have to hash out a few things. And it's an ongoing development of the relationship. And I think ultimately that rally, which people would have expected potentially in April, if they risked very quickly, didn't happen, because I think it became more kind of, this is what we need to deal with for the foreseeable future.
I was going to ask you your take on China. We've seen the beta plays, and really when it comes to sector specific, there's plenty of reasons to kind of be still optimistic around this market. How do I look at valuations now? Are they cheap, fair, full?
For China at the moment, I would say fair. I think they're just above the averages now. So, and I think where the China sits in that structural and macroeconomic sphere, the valuations are probably fair. We need to see a catalyst of, again, the deflation being addressed, or kind of reflation in the economy, which is, again, subject to seeing a consumer confidence, seeing private company confidence reviving. So ultimately, the broader market for China, unless we see forceful measures from the policymakers, which is unlikely at this stage because the growth is still staying somewhat resilient, we're not going to see this significant beta rally. We're going to see a lot more selective rally around places where the policymakers are supporting the economy. So tech innovation, we're seeing obviously biotech to some sphere of that. Some of the exporters that are in advanced manufacturing, and potentially later stage. And again, not to forget the anti-evolution beneficiaries.
Right.
And later stage, if all of this crystallizes into a stronger consumer confidence, we can start to see potentially a re-rating in some of more consumer-focused companies. Yeah.
Katerina, thank you. Katerina Bigos there, CIO, Core Investment at Asia ex-Japan at AXA Investment Managers. We're checking, of course, and tracking the sell-off across Asia right now. You're starting to see the Kospi now. We're down close to 5% losses there in Korea. Of course, the tech side of things is definitely bearing the brunt of the sell-off, following what we saw in the U.S. We're also watching crypto. We saw Bitcoin briefly below 100,000, so certainly that's where risk assets are right now. We are taking risk off the table substantially here, and there you go. Nikkei 225 is down close to 3% now, Dave.
Yeah, there we go. 50,000 is the next level to focus on. And as you look at the downdraft going into the open today, certainly we're looking at some key levels to watch. We'll tell you what those levels are in a moment. Counting down to the open of trade, likely declines and sharp declines going into the open today, juxtaposed with a beautiful morning here in Hong Kong. The opening bell, 15 minutes away. Shanghai, Shenzhen, and here in Hong Kong. This is The China Show. Good morning.
markets are selling off. We'll see how China fares in the face of all this right now. On your agenda today, we'll talk about, of course, the 50-year CGB sale. Qiang, he is going to be speaking in Shanghai at the China International Import Expo, where Steve is at. So we'll look out for that speech here. And also a big trading debut here in Hong Kong. We're talking about Series, is of course the EV maker. They're partnered with Huawei and the like here. So we'll see how that fares on a time when things are looking pretty volatile across risk assets here today. We're tracking the currency. There's a bit of a dip there as well. And tech, crypto, gold, banks, all in focus in terms of sectors here today. We do have earnings coming through from Hong Kong Exchange.
Yeah, that's going to come out around noon based on historical releases. And it has been a banner year. And, Yvonne was just talking to Bonnie Chan, of course, and the amount of money raised. But yes, turnover as well. So a lot of that will be in focus and how they also frame the next few months and quarters ahead. Now, really, back to the here and now, 0.5% to the downside. Of course, there is another big conference, of course, that we're tracking.
Yeah, we're waiting for Qiang to speak here at the China International Import Expo. And our chief North Asia correspondent, Stephen Engel, is there, joining us live from the venue. Steve, what's on tap today?
Well, I'm everywhere, Yvonne and David, obviously. We are there in Chongqing for the series exclusive interview, which we'll be talking about shortly. We were at APEC, and now we are at CIIE here in Shanghai, the 8th annual one that essentially Xi Jinping set up in 2018 to, in part, alleviate some of the concern about that trade surplus of China, no doubt, with its major trading partners that is likely to, again, hit a record as this year, after last year's record, of course, because China has really been leaning on its exports to propel its growth as domestic consumption has been sort of tepid. Obviously, that's something that we're likely to hear from Qiang, talking about boosting consumption. We've seen over the last couple of weeks more plans and programs to essentially boost households' percentage of GDP, the consumption angle, which has been lagging as the domestic demand story has been fairly weak through a fairly stagnant economy, no doubt. So that's something we're going to be looking out for, and that's what the Chinese are absolutely prioritizing right now, boost domestic consumption. Now, we are coming off the APEC meeting between Xi Jinping and Donald Trump, where they did come together for a trade truce. There wasn't some big bang agreement that they both signed, but China is resuming its import of soybeans. The one thing that was left off that Donald Trump alluded to before the meeting was those Blackwell advanced AI accelerators, which Donald Trump essentially said it could be on the table. I think he was convinced otherwise by the more hawkish members of his cabinet, essentially saying, no, that's national security. So it was not discussed with Xi Jinping. That would have helped alleviate a little bit, obviously, that trade imbalance with the United States if China was going to start importing the most advanced AI chips from NVIDIA. But again, baby steps forward for China-U.S. relations on the economic front.
Steve, talk to us about this listing today and the conversation you had.
Yeah, so Series, which has the Ito brand, which was the #1 brand for the car, the M9 in the luxury segment, above 500,000 renminbi. So the M9 sells for about $70,000 US. We were just talking about this anti-involution campaign to essentially end the price war, the race to the bottom in the industrial overcapacity here in China. Well, according to Zhang, who's the president who talked to us in Chongqing exclusively at their third and biggest factory, essentially they've not had to lower their prices at all because they're at a price point that they can still have some pricing power. And also their main partner is Huawei, which essentially sells the premium handsets, and they also provide a lot of the telematics and the ADS, the advanced driver assistant software. And so it's essentially a Huawei car, a Huawei phone on wheels. So they've been able to have this kind of pricing power. So we did a lot of different interviews with Zhang over the course of a couple of days. They're going to be listing, they're going to be using their proceeds to also go beyond the China market, where they beat Mercedes, they beat BMW in the luxury segment in this market. They want to go to the Middle East. I think the West markets right now a little more sketchy. Definitely the United States, not in the plans. But again, they do want to go global. So obviously tune in to our exclusive coverage of that series Hong Kong listing that, of course, follows several years ago when they listed here in Shanghai.
Fantastic, Steve. Yep, we'll be looking forward to that, and hopefully our viewers too. Stephen Engel there, our Chief North Asia correspondent. Just going into the open today, let's have a look at where we are market-wise. So we're just looking at the Nikkei 225, just to call your attention to that too. Well, obviously, number one is the stock. The debut today is not immune to this downdraft we're seeing across the region. We're down 2%. As you can see, Nikkei's now taken out 50,000 to the downside, 3.6%. Kospi's down over 5%. And how that's showing up here in Hong Kong are again likely going to be double-digit declines in a lot of these levered ETFs. Oh, there you go, 15% down on SK Hynix in the pre-markets today. How that's playing out across the benchmarks right now, not as much as the big winners like Kospi and the Nikkei, but still some declines going into the open today. Hang Seng Tech showing up on your screens very shortly. We're down about 1% on that. Not as bad, but still bad. This is the China Show. Okay, welcome back. We're continuing to follow this sell-off that we're seeing to varying degrees. It's really, really bad in Korea, somewhat bad in Japan, not so much, and that's relatively, we're down only 2%, and that's relatively speaking, of course. That was enough to take us through this trend line support level. We closed below that, and we're continuing to see declines in Hang Seng Tech, even more so in the opening minutes.
Yeah, where you're seeing it is really in Seoul here right now. Take a look at how this meltdown that we're seeing on the Kospi. And when it comes to the likes of Samsung, SK Hynix, those are seeing significant downside here today. And you're seeing it in some of these sort of Hong Kong levered ETFs that do track, of course, these stocks, right? Take a look at SK Hynix. We're down 15%. Keep in mind, it was just 2 days ago, the Korea Exchange came through with an investment caution around that stock as well after, 70% gains in the last quarter. So certainly there is that concern that maybe things have gone a little bit too far when it comes to this whole AI plays. There you go. We're watching the chip stocks very, very closely here today. And yeah, what else are we watching out for? China Tech, of course.
China Tech, yeah. Alibaba overnight, Tencent, I think Meituan also getting an upgrade. It's not showing up today as far as that analyst call is concerned there. I think it was Arete that came out with an upgrade there. 2.6% on SMIC to the downside. We are set for the worst week for crypto assets. Looking at the Bloomberg Galaxy Crypto Index, we're down 15%. First 2 days of the week, it's playing out across many of these Bitcoin ETFs, plus the crypto equity debuts today. And speaking of debuts, there we go, 2% on Series Group. The opening bell is coming up next. This is the China Show.
But the reality is China is the second most liquid market in the world, and asset managers are going to want exposure. So when times are a little tougher, maybe they'll be underweight and maybe it'll be beta, be more passively held. But when the animal spirits are kicking in and when there is clear advantage being struck by winning companies, they want alpha. Hong Kong, as you know, is the most active IPO market in the world. Quite extraordinary.
Yeah.
And that's going to continue, and it's across industries. So if you are an investor and you're interested in one piece, robotics or AI or EV or maybe gold, metals, you have opportunity across sectors.
Morgan Stanley CEO Ted Pick there speaking with us at, of course, the HKMA Global Financial Leaders Investment Summit here in Hong Kong. And really, he said India needs to take a page out of China here when it comes to, of course, building these big winners and darlings. Industrial policy is what maybe that democracy needs here to really kind of have these standouts in their equity market. But certainly today, we got to kind of push sort of the optimism aside because really we're focusing on really what's happening here regionally here and what we're seeing from some of the sell-off overnight when it comes to tech, when it comes to crypto, that certainly is filtering through here in the China Open. CSI 300, we're down about 1%. So this drawdown we are seeing across mainland markets here today. You are seeing when it comes to that 30-year yield, it is bid up here. Yields are down 2 basis points, but bonds are bid up. Again, we're watching very closely the tech space, right? So you are watching the likes of Capricorn Technologies. We're down some 2%. So even the Chinese chips are not doing too well here today. CATL shares also down about 1%. This is coming at a time when you see the Kospi, of course, that sidecar that was triggered there. So certainly we're watching very closely where, we're going to see the most in terms of the selling, right? And it really has pertained around the chip stocks, the likes of SK Hynix, Samsung there. Take a look at how Hong Kong is faring, because obviously HS Tech is going to be the one where we might be the most vulnerable to some sort of sell-off. There you go. We're down 2.5% for HS Tech now. And you've seen the likes of Baidu, Alibaba, Tencent, Xiaomi. They're basically all down about 2% or more this morning. So there is certainly that question about AI and frothy, valuations. We certainly heard that from the likes of Ted Pig, from the likes of David Solomon at the HQMA event. That seems to be what maybe led to maybe that excuse for investors to kind of at least take some profits when it comes to the whole AI trade here. So that's why we're seeing this sell-off for the most part. But yes, it's going to be about those levered ETFs that we're seeing here in Hong Kong that do track those big Korean names, right? You take a look at Samsung, take a look at SK Hynix. We saw double-digit losses when it came to SK Hynix here in the pre-market. And we also have that trading debut, if we still have it here right now, Series, right? This is the 8th largest listing we've seen this year that's raising more than $1 billion. May not be the best day for the first day of school here amidst all the sell-off here right now, Dave.
Yeah, they wouldn't have known, though, unless they were really reading the early tea leaves going when they picked the trading debut. But yes, we'll look at that. It was down last we checked there on Series, right? But it's understandable given if you're long Korean markets, by the way, just my suggestion is close your eyes now. There we go. This is the biggest single-day drop in Korean equity markets. You look at the main benchmark, Kospi index, at about 6%. This is the biggest drop on the Kospi. We've now surpassed the drop during Liberation Day. This is now the biggest drop, set for the biggest drop going back August of 2024. I'm looking at the Kosdaq index. We're down even further there. We're looking at, well, that's the Kospi 200, which is the large caps. On Kosdaq, we're down about 1,600 stocks of the nearly 1,800. So that's about what? That's about 87, 88%. In terms of market breadth, and some of the ETFs listed here in Hong Kong that Yvonne was alluding to earlier, coming up on your screens. Well, 2x up, 2x down, 2x down. That's what you're going to get. 20% down on SK Hynix, 2x leverage ETF here, listed here in Hong Kong. Yep.
So we mentioned about sidecar. I mean, basically, South Korean authorities decided to really halt these sell orders for the program trading here for the first time since, of course, as we talked about Liberation Day. So let's bring in our guest, Jongmin Shim, Deputy Head of Korea Research at CLSA. Jongmin, it's great to have you in the program. Thanks so much for joining us. Tell us what's really going on. Is this the beginning of a serious correction, or what do you make of it?
Well, I think it's not beginning of the serious correction. I think this is a healthy correction, I would say, because there have been, ongoing concerns on the AI, and Kospi obviously have done a very strong performance in October, and with that, we have had the APEC summit last week, which removed the uncertainties around the tariff concerns. So I think overall, there's lack of catalyst in the near term, whereas all the positives were well reflected and known in the market. So I think that have led to this type of sell-off. And if you look at the recent few trading days, the breadth of the market strength was not really wide. It was concentrated on a couple of stocks, including SK Hynix, which is down quite substantially today. But I think it's more of a correction that we need to kind of consolidate and see, to look through and look for additional further uptrend going forward.
Jongmin, great context. This is David, by the way. So, what's the advice to clients today?
Well, if we look back, the performance of SK Hynix, for instance, in the past 6 up cycles since GFC, actually, if you think that the upcycle is not over, then SK Hynix on average outperformed Kospi by 234% on average in the 6 times of an upcycle. So I would recommend investors to rather add more of semi names rather than panic sell at this point.
Jongmin, what are going to be the next catalysts to watch? I think most would look at NVIDIA. I mean, they report on November 19th. What are you looking at in terms of near-term catalysts in this market now?
Well, there's not much of a near-term catalyst because the catalysts are well known, and the Korean chip makers have mostly came up with their results recently. So I think we'll just need to see how the big tech in the US report and the commentary from there, as well as you've mentioned NVIDIA, for instance, and then see how the narratives change. And then we should also look at the export trend and what the big tech companies mentioned about their capex and their demand on the semiconductors in the coming months.
Jongmin, Korean regulators tend to be extra careful and extra active when, typically when we get these major market moves. We all know, of course, the narratives around some of the flows coming here to Hong Kong, some of the products. Should we expect regulators to be more vocal over the near term, given what's been happening? What are you expecting to hear and see, if any?
Yeah, so actually we are looking for some catalysts on the policy side. So for instance, the Korean government have announced that they would have the dividend income tax cut, which is expected to be announced in early December. And then there are talks of mandatory treasury share cancellation, which is expected to go through the National Assembly as well. So like all these government policy-driven support on the Korean equity market is still there. And if you look at the Kospi performance, actually, it was mostly driven by the exports and the semis and the shipbuilders, etc., the cyclicals and the major exporters within Kospi, rather than the tailwind coming from the government policy side, which I think will start to materialize starting December. So I think that could be another catalyst to support the index.
Jongmin, is the advice still to stay invested? If so, what part of the market do you think is still safe? And is there now a reason to rotate to more defensive side pockets of this market now?
Well, actually, if you think about banks, for instance, they haven't really been performing that well on a relative basis, although they have been holding up quite well. So now I think investors are looking for some safe haven. And, in the near term, maybe, with the upcoming 4Q results in early next year, the banks will be announcing updated shareholder return policy, so that will be another catalyst to drive the shares further. I think maybe if you want to look into defensives, banks could be one of the sectors that you can rotate into, because I think with the macro recovery and domestic consumption recovery, I think the credit costs and asset quality should be improving heading into 2026. So I think that will be a catalyst for the banks if investors are interested in looking for some defensive plays.
Jongmin, thank you. Jongmin Shim, their Deputy Head of Korea Research at CLSA. Thanks for joining us right now. As we continue to see this drawdown in Korea, we're also watching some of the more riskier parts of this market, and that is, of course, crypto. As we talk about, we're sub 100,000 for Bitcoin now, and we are seeing it in some of these crypto stocks like Boya down some 8%. Dave. Yeah,
and this big listing that's here today might not be the perfect timing, but timing when to list is more really an art. I mean, pricing it is more than art than the timing itself. We're down 5% on series today. So this is the maker of China's best-selling luxury vehicles. It says it remains in a very strong partnership with Huawei, despite U.S. sanctions on the tech company that's really transformed its brand here. And as the company does make its debut here in Hong Kong today, its group president, Zhang, told us more about really what their ambitions are moving forward.
By end of this year, we're gonna put some products in the Middle East for the first time, that the Chinese premium EV go out.
Like the M9.
M9, yeah.
Where? Saudi Arabia, UAE? UAE.
First, yeah. We're not going to expand like every country over the night. That's not real, but it's we're gonna go one by one places to make sure that every country we go to, we deliver exactly the same functions, the same services to my customers. We don't want to go abroad and cut this, cut that. So that's unfair. So every market when we go exactly the Chinese version.
Would that be an export product then, not made there?
It will start with export.
But eventually you could be possibly making it in the Middle East?
Sure, yeah, it depends.
Where else are you looking? Because obviously the biggest car markets in addition to China are the United States and Europe. You have origins in the United States and California. Given the tariff war that's happening right now and the protectionism, what are your views on the U.S. market?
Well, U.S. market, to be honest, we rarely consider. It's been very far across the Pacific. So we start with
not very welcoming.
We start with neighbors.
Okay. Yeah. How do you answer the question, if there are those, when they're raised, about your association with Huawei? We all know that Huawei has been sanctioned by the United States. It has some red flags. How do you deal with that question?
We are good partners. We partnered up in the difficult times. We're going to help each other. And from what we did in China, accomplished. So this is a cross-border cooperation. We used to be a traditional car manufacturer. Huawei used to be the communication and cell phone company. So in the past, these two industries are nothing to do with each other. But nowadays we partner up. We're working together to build the next generation's EV car and the intelligent cars as well. So it has to be this way. For car companies itself, it's very difficult to move like us for years, what we did today. And it's also very difficult for companies like, the cell phone companies to overnight shift to car manufacturing is also very difficult. So this partnership is innovative, I think.
Were you surprised how quickly your brand went to #1? We were. I was. I was like, what is Ito? It's basically Harmony OS. It's Huawei on wheels. Oh, is it? What is Ito? What is Series? It's not a household name.
We are not surprised. We're pleased to say that, because the first day when we shaking hands, decided to work together, we're aiming for something, not build something to sell. Because companies like Huawei and like us, we have no room to back up in 2020. It was a very difficult time. So it's very difficult for Huawei at time as well. So we're aiming for the best EV cars.
That was Series President Zhang speaking exclusively with, of course, our Stephen Engel there on this very special day, of course, for the debut of the company. Well, speaking of, we're not done. Hong Kong Exchange is not done, certainly. They're coming out with earnings, by the way, in case you missed that. So tomorrow, interesting timing, two companies, somewhat related, I believe, in the same industry. There we go, James Peng and Tony Han, Pony AI and WeRide, respectively. We'll be hearing from them as they gear up to list, of course, here in Hong Kong. You can catch those interviews right here on the China Show at the Times on your screen. So stay tuned for those ones coming up.
Yeah, let's take you live now to pictures in Richmond, Virginia in the U.S., where we're hearing Democrat Abigail Spanberger has won the race for governor there in the state. And certainly this is going to be quite interesting. Of course, Virginia has been seen as a bellwether for the 2026 midterm elections, and her victory really marking a reversal from the rise of the former governor, Glenn Youngkin, back in 2021. She has seen as, in a way, a rejection of Trump's policies. She's talked about tariffs, government shutdown, really bringing a lot of uncertainty to her state, and her win potentially helping the Democrats in the state who seek to withdraw the state's congressional district there. So there you go, Spanberger there talking to the crowd, and it is a bit of a historic win as well. Spanberger will be the first female governor in Virginia's history. This is Bloomberg. Democrat Abigail Spanberger has been voted and elected governor in Virginia, and a vote seen as a bellwether for the 2026 midterms. Ballot boxes, meanwhile, are still open in New York. We're tracking several races all across the country there, but in New York specifically, where Socialist Democrat Mamdani has led opinion polls since the June primary. Let's bring in Washington correspondent and Balance of Power co-anchor Joe Matthew joining us and watching, of course, all that goes on there on election night. Joe, let's start with Virginia. What's significant about this win?
Well, Abigail Spanberger, as you mentioned, just speaking now here, this was expected, by the way. All the polls predicted that she would win, and so we're not terribly surprised to see this one. We'll call this the first one here on the board, and to your point earlier, a bit of history at play as Abigail Spanberger becomes the first female governor of the Old Dominion. This is a Democratic congresswoman seen by many as a moderate, a former CIA officer who worked in the field and has a national security background. So that really resonated with the people of Virginia, knowing how many federal employees and how many members of the military and other federal agencies live and work there, many of whom, of course, have been furloughed, tens of thousands in this government shutdown, and thousands before that had been fired by the Doge effort and Elon Musk. So all of these combined to lift her up to a position where she would be the next governor, running against Republican Winsome Earl Sears, who never really got out of the gates and was behind in the polls from the get-go. This is one of two gubernatorial races we're tracking closely with moderate Democratic women poised to win their races. New Jersey is the other, and it's a much tighter race for Mikey Sherrill, the Democratic congresswoman there, up against Republican Jack Ciattarelli, who has the endorsement of President Trump, in a race that many see as too close to call. This could take some time in New Jersey and might be a bit later on this evening before we know.
Joe, in fact, let me just take you slightly further than New Jersey.
Yeah.
Help us understand New York. Do we have an update there? What are we watching specifically out of New York?
Look, this is likely to be a blowout from any poll that we've seen for Zohran Mamdani, the Democratic socialist self-described, who has been running against Andrew Cuomo, a legacy name in the Democratic Party, not just as the former Democratic governor, but of course his father, many remember here in the New York area and nationally when it comes to Republicans. So this is a strange scenario, to be perfectly honest with you, where you have a mainline Republican in Curtis Sliwa not making a dent, but in fact, Republicans are endorsing Donald Trump and others endorsing Andrew Cuomo as an alternative to Zohran Mamdani. But it's not likely to make a difference. Most polls show him ahead by double digits. The poly market gives him a 95% chance of winning. And we're waiting for this one. We've got another 10 minutes or so before polls are closed, and it could take a while where New York is to count the votes. On the other hand, if this is a blowout on the level that some have been predicting, we might get a pretty early call there. So we're looking in the next hour to figure out what happens to Manhattan.
Joe, maybe talk big picture here. This seems to be the first kind of voting that we've seen since President Trump returned to the White House back in 2024. How does this set this up for the midterms later on?
Well, that's going to be the big conversation when we come out of this tomorrow. Let's hold on before we see what some of the other results are. We've not only got these races we've already talked about, but Prop 50, the redistricting vote that's taking place in California, and we're going to have to wait some time for that. But in the end, the real conversation for Democrats as they're considering the midterms is who's got the playbook. Is it taking the socialist route of Mamdani in New York or the moderate route of Abigail Spanberger in Virginia? There's a pretty far gap in between, and I think the party is going to need to figure out exactly how big the tent is and what the message will be going forward in running against MAGA Republicans. This is a slightly different situation than what we've seen in some of these races this evening, and the midterms are going to be bringing some pretty ferocious races and some very expensive ones to the fore.
Joe, thank you so much. Fantastic and great having you, by the way. Thanks for staying up. Joe Matthew there, of course, our Balance of Power co-anchor in New York for us, giving us an update of things happening, of course, that side of the world. 12 hours, give or take 12 hours back. Okay, just an update here of these markets. And yeah, if you're long, close your eyes. But if it's too late, then just take it in. There we go. 5% declines. 4 or 5% on the Nikkei and also on the Kospi index. Taiwan is far behind, but 2.2 is still a very negative print going into the first 51, 52 minutes of the cash market session there. Plenty more ahead. This is Bloomberg.
All right. right, we got some data too that just crossed your Bloomberg here when it comes to, of course, the Caixin October services PMI 52.6. That's quite a good number here, and it was beating estimates of 52.5 slightly there. But really, we are talking about rating dog. I shouldn't say Caixin. My apologies there. But yes, this is a bit more on the stronger side in terms of where the forecasted range was from some of the economists that expected there. But yes, we are seeing a stronger number there when it comes to October.
It's easier to say rating dog, though, right?
Sometimes I don't know if I should. Yeah, it's a definitely interesting name versus Caixin.
Yeah. One word, by the way. Yeah. No space.
No space.
No space.
It's not a typo.
No. Okay. Well, speaking of, right? So we did also get the PMI numbers coming out of Hong Kong, not from rating dog. And that one actually coming in, I think, at the highest level of the year. And to unpack that for us in the next hour is Goldman Sachs' Andrew Tilton, who oversees Asia economics research there for the bank, will be joining us to talk us through those numbers. Very briefly, so in case you missed the news overnight, right? A low-cost Mac, the announcement coming out of Apple, I believe, or reporting. There we go. Ready this low-cost rival to rival other laptop players, and we are getting a. It's hard to, by the way, disentangle whether or not this is tied to the sell-off or this is not the app. Could be both. But we are seeing that declines in there as well. Some of the ETFs.
Yeah, we're watching, of course, Samsung, SK Hynix, and some of the Hong Kong leverage ETFs that track those stocks here. And we continue to see a big drawdown there. There you go. Double-digit losses for that ETF for Samsung and SK Hynix, down some 14%. The Kospi, close to 5% losses here right now. Welcome back to the China Show. Here's a look at the HSI half hour into the session. Relatively speaking, Hong Kong faring a little bit better than the rest of the region. We're seeing 1% losses on the Hang Seng. HS Tech certainly feeling a little bit more, just given that the brunt of the sell-off that we're seeing across Asia really has been focused on AI, focused on the chip stocks, tech, crypto, and the like. That's why you're seeing the Kospi still seeing one of the biggest losses since Liberation Day, Dave.
Yeah, so we're just coming off lows a little bit. We were down almost, I think, 6% at one point. Kospi indexed 39. 22. But as you can see, the Nikkei's also taken out that 50,000 handle to the downside. Not far behind is the Taiwan market, and if one common denominator between all three, I'm not sure what that is that these are the big winners. Have been the big winners, still are, by the way. So, in fact, just context, right? The Kospi's down the most in months. It's back to levels 2-3 weeks ago, right? So that just gives you a sense of how good this market's become. Right, some of the big movers underneath the hood really related, exactly the same story. SoftBank to SK Hynix to Samsung. We'll get into all of this in a moment. SoftBank's down 13%. Hang Seng Tech was down already yesterday, close below this trend line. Even more so today. We'll see whether or not that does become properly resistance level. Coming up on your screens. But suffice to say that we might just need to look at that for another day, of course. There we go, on your screens, in case you're curious what the next level to watch is on the Hang Seng Tech Index. And in terms of factors that have led to this rally so far, last we checked, about 10 minutes ago, this is global-wide. This is one-day return. And as you can see, growth, liquidity, revisions, and momentum leading these declines across the equity markets. We're down about 2% on the MSCI Asia Pacific Index.
Let's bring in Mark Cranfield. He joins us live, our MLI strategist out in Singapore. Mark, we were just joking about that comment that came through from the HKMA event from the likes of David Solomon from Goldman Sachs, from Ted Pig, from Morgan Stanley, that's saying a 10 to 20% equity correction for the next 12 to 24 months is healthy. I didn't think it was going to be that big of a deal. Is it?
Yeah. Well, you should ask them, do they still feel healthy today after seeing all this mess? I mean, this is it's starting to get a little bit ugly here. I mean, we've been talking for a while that AI story was building in some very big valuations, that people were a bit concerned about it, but they didn't really want to be the first one to do anything about it. And now you're starting to see it trigger. This is clearly an asset liquidation matter. It's about preserving P&L at the moment, because you can see how quickly it's transferring from one space to another. So we're even in the currency world, one of the recent themes has been selling the yen quite aggressively, particularly since Sane Takaishi was announced as the LDP leader and then she became prime minister. If you look at how far the yen has fallen just in that period of time, and now that's starting to unwind. So anywhere where people had leveraged positions, where things were starting to look like a little bit like a one-way trade, all of that is starting to unwind now. And people are just trying to cash in, save P&L where they can until they sense that things are going to get better. Typically, that doesn't happen in Asia. What we would need to see is US equities to stabilize first, and then there'll be more chance that Asia will follow after that. It looks as though this is going to run into the European day. It'll be a pretty ugly start for European equities. If we see some stability in the US, if people think that this is a dip they should be buying, it's gone far enough, then we will see better days ahead in Asia. But if US continues to, in the same theme as we're seeing in Asia today, it's going to be a while before it unravels. Exactly where the right place for people to get back in, that's anybody's guess, really. But we still have a couple of weeks to go before Nvidia's earnings. People would expect those to be decent. It's a question of changing the narrative back towards looking for the positives rather than looking for the bearish triggers. Clearly today, people just want to see the bad news. The list of shares that you posted up earlier with all the big losers, one that was noticeably missing was Nintendo. Nintendo gained 10% at the opening today. So clearly people are not interested in stocks which are going up. They only want to talk about the ones which are going down.
Yeah, well, I blame my producers for that because they picked out that list, Mark. I'm kidding, of course. I love my producers. We love our producers, of course. Guilty. I was the one who actually came out with that list. We'll talk about Nintendo in a moment. Mark, as you were actually just talking, quite fittingly, on the NASDAQ, it actually crossed negative 1% as you were talking about what the U.S. session might look like. What do you think the U.S. session will look like Wednesday, Mark?
It's probably going to start badly. It'll be very surprising. Typically when you see a 1% move in Asian time for NASDAQ is pretty big. We don't often get that kind of a sell-off. That will certainly spook people when US market and the cash market start trading later today. So you would expect it will start on a bad footing. As the day progresses, maybe we'll get something from people like Donald Trump or Scott Bessent trying to improve the mood in markets. You may even get some of those same CEOs who sounded a bit defensive yesterday. Maybe they'll say, well, we saw this coming anyway, and this is what we expected. It's all just very healthy. There's plenty of room for supportive comments to come out during the US day. There may even be talk that the US shutdown is starting to come towards an end. I believe in the next couple of hours, we're going to announce that the shutdown is the longest on record if we don't see a sudden change. Well, that should galvanize people into really wanting to get it solved. So maybe we'll see something positive on the shutdown. We could even see some other companies talking about more deals in the AI space. We've seen lots of big transactions recently in that way. There's plenty of things that could improve the mood in the US market, but it will probably start badly.
Mark, thank you for the positive note. Mark Cranfield in Singapore for us. Earlier on, the focus is really on this Korean market. We're down about, let's call it 5%. So the headline that crossed about 35 minutes back, South Korea halting sell orders for the program trading on the KOSDAQ markets. To help us understand market mechanics, given the price moves already, here on set with us, our Asia equities reporter, Sang-Mi Cha, joins us to talk us through the sell-off here in Korea and what we're watching there today.
Yeah, so the sidecar is triggered when the futures on the Kospi or KOSDAQ drops below 5% from last night's close, right? But the next in line would be the circuit breaker. And we are hearing actually some of the trading desks talk about this right now. It's when the gauge drops more than 8% and the trading is halted for 20 minutes, right? So I think it's pairing a little bit, so the losses. So we're not going to go there. But it could happen. So, and then when that happens, it comes in stages. So 8%, and then the next is 15. So you will have that 20 minutes of no sell, no buy for those gauges.
And I think a lot of it started with what we heard from the exchange on Monday about SK Hynix. Given this, I mean, it's basically gone upwards and continued on. I mean,
vertical.
What do we look for next in terms of that stock now?
Yeah, SK Hynix, it's the biggest HBM provider for NVIDIA, right? And it's risen 200%, over 200% this year. And the investment caution from the Korea Exchange actually was quite of a rare instance for these mega caps because they do that for some of the Kosdaq listed stocks. But it means just, investors telling investors to proceed with caution. But again, there are some other next cautionary measures, right? So that would actually trigger some of the trading halts for some of the individual stocks as well. And we're actually seeing some of the moves in inverse and the leverage ETFs, especially listed in Hong Kong, some of the wild sell-off there. So Kospi is correcting, but they're still saying this is a healthy correction for now. But we'll have to watch whether this continues.
All right, Zhang, thank you, Zhang Qiang there, joining us for Asia Equities reporter. We are also on track. We're looking at my terminal here right now, and we're expected to hear more from Chinese Premier Qiang. Yeah. He is addressing the China International Import Expo, now underway in Shanghai. The event is one of President Xi Jinping's flagship initiatives aimed at showcasing the country's domestic demand potential. That's where our Chief North Asia correspondent, Stephen Ingles, is. He joins us live from the venue. You've been all over the place, Steve. We're expected to hear a little bit more from Qiang. What do we know so far?
I'm looking forward to hearing more from Qiang as well. He is speaking here at CIIE right now, but the audio is down, so I can't hear it. So we'll have to rely largely on the Bloomberg terminal, which is a very reliable source, of course. There he is up on the monitors right now. I guess if I had the headphones, I'd be able to hear him. But what is he talking about? Essentially this, Yvonne and Dave, which is the front page of the Shanghai Daily, talking about CIIE welcomes the world. And we had a story on the Bloomberg terminal yesterday about Wang Wentao, the Commerce Minister, as well as Qiang, I'm sure, is reaffirming this, a new campaign by the Chinese government. Essentially, it's a promotional campaign where they will pick between 5 and 6 different countries every year to promote the Chinese market as an export destination for those countries, an import destination for those products. Essentially, this promotional campaign is intended to alleviate a lot of the concerns in developing nations where Chinese exports have really dominated, and there's raised a lot of concerns that it's not reciprocal, that those developing nations do not have a reciprocal market in China. This campaign is going to be called the Big Market for All. So again, boosting or alleviating that trade imbalance, which is expected, a surplus expected to rise to another record this year in China. They need to boost domestic demand, and that is also part and parcel with this campaign. Get more Chinese buying products, they need to import more, and you get an export destination for many of these developing nations.
Steve, fantastic. Thank you so much. Stephen Engel there, our Chief North Asia correspondent. As Steve was just mentioning there, of course, Chinese Premier Qiang is beginning his keynote speech. Let's listen in.
Over the past decades, the world economy has achieved the fastest growth in history. This is, to a large extent, due to the commitment to mutual benefit and free trade, and to concrete actions to connect markets, complement each other with respective strengths, and share opportunities among others. Common development was given a strong boost as a result. At a time when world economic growth is slowing down and international disputes are heightened, it is all the more important for us to stay committed to equal and mutually beneficial cooperation, embrace free trade, and resolve differences and problems through pursuing development together. China stands ready to work with all parties to foster a more open and inclusive development environment, increase trade and investment liberalization and facilitation, and promote stable and unimpeded global industrial and supply chains so as to pool strengths for economic development. Second, we should pursue the greater good and defend international fairness and justice. The past few years have seen a surge in trade restrictions around the world, making it more difficult for multinational corporations to do business. and harming the interests of many countries, especially those in the developing world. This is largely a result of zero-sum mindset that only puts one's own interests first and overlooks the greater good. The Chinese people always stress that a gentleman should pursue his wealth through honorable means. In a world where the future of all countries is closely interlinked, stability and sustainable development of any particular country cannot be achieved by seeking unilateral wins or gaining at the expense of others. Instead, countries need to balance their own interests with the greater good and, when needed, prioritize the latter over the former. This requires the broad-mindedness and a sense of responsibility to put the general welfare of the international community first. Only when all its members help each other and pull together can the world family embrace a bright future full of hope. Even as the market is becoming a scarce resource in the last few years, China remains committed to expanding import with an open and inclusive mindset and sharing with the rest of the world China's immense market. This in itself is an example of how China cares about the greater good and shoulders its responsibilities. China is ready to work with all sides to strengthen solidarity and collaboration, reject bloc confrontation, and strive for more inclusive and balanced development that benefits all.
Third, we should advance governance reform and improve the system of international trade rules. We Chinese people always say that it takes good rules to make good outcomes. Without a fair and effective governance system, it will be hard for the global economy and trade to enjoy steady development, and for countries to have their legitimate rights and interests protected. We all know that since the beginning of this year, the word tariff has made global headlines. A raft of measures have been taken to sever supply chains or erect barriers. This has seriously undermined international trade rules and disrupted the operation of companies globally. In this context, it is particularly imperative and urgent for us to strengthen global economic governance and improve the system of relevant rules. In September this year, President Xi Jinping put forth the Global Governance Initiative, GGI, an initiative that provides important guidance for improving global economic governance. China will work with all sides to actively put the GGI into practice in international trade. With a commitment to multilateralism and basic norms governing international relations, we will work to reform the global economic and trading system, improve the WTO-centered multilateral trading system, and make trade rules fairer, more reasonable and transparent so that they will serve common development. All these are aimed at providing a stronger underpinning for all countries to develop and thrive together under better rules. Ladies and gentlemen, friends, I believe you have all noted that weeks ago, the 20th Central Committee of the Communist Party of China at its 4th plenary session deliberated on and adopted the recommendations for the 15th five-year plan, mapping out the top-level design and strategic blueprint for China's economic and social development in the coming 5 years. For China, making and executing plans is an important experience for economic and social development. And this plenary session has injected more certainty for China's economic and social development for the coming period. This could be seen from two aspects. First, it provides the certainty of development. China will continue to prioritize economic development and focus our efforts on pursuing high-quality development, with special emphasis on expanding domestic demand, especially on boosting consumption, which is to fully unleash the potential of its mega market of over 1.4 billion people. In the meantime, China will foster and strengthen new growth drivers in the digital, green, and intelligent sectors at a faster pace, which is set to create a number of new industries at the 100 billion yuan or even 1 trillion yuan level. We will put in place more intensive and effective micro-policies and reform measures in light of the goals set out in the plan to push for steady economic growth. In 5 years, the Chinese economy is expected to surpass 170 trillion yuan, which will mean new significant contributions to global growth. This is the first point, the certainty of development. And second, the certainty of openness. China will firmly advance high-standard opening up, steadily expand institutional opening up, and introduce more measures of voluntary and unilateral opening up. We will promote pilot programs to open the telecommunications and medical sectors, as well as comprehensive trials and demonstrations for expanding opening up of the service sector. We will host a series of thematic events to share opportunities with the world by helping more quality foreign goods and services access China's mega market. Meanwhile, we will take further steps to make China a favored destination for foreign investment and to ensure that foreign businesses feel more at ease, convenient, and confident about their operations in China. As China marches toward greater modernization, it will surely bring more stability and positive energy for the entire world. Openness and cooperation hold the golden key to development and prosperity. We sincerely hope that more friends at home and abroad will use the CIIE as a bridge and platform to step up communication and deepen cooperation, so as to continue writing new chapters of mutual benefit and win-win on the vibrant land of China. Thank you.
All right, you're just listening to Li Qiang, the premier there, in that keynote speech at, of course, the China International Import Expo, and really relaying this message of cooperation, multilateralism, and really talking about the need for other economies to, cooperate when it comes to trade. So certainly as a boosting consumption, they want to realize the potential of the big market. Decoupling recently affected companies' normal operations, but overall upholding cooperation amidst this global economic slowdown. Let's bring in Steve. He is there at, of course, the Expo in Shanghai. Steve, what stood out to you?
Well, true to form, he kept it pretty economic in length. Obviously, it was about a little less than 20 minutes, which is true to form, as he usually gives the keynote speech to open up CIIE, and he got right to the point, essentially being a champion of free trade and also a proponent of the multilateral rules-based trading, and did slam. He didn't mention the United States, but did slam protectionism and the mentality of zero-sum mentality. So, again, he was talking about boosting consumption, as you rightfully said, and they're opening this market further. Again, as I said a few minutes ago, they launched this new campaign through the Commerce Minister Wang Wentao, the big market for all, trying to make China a good destination for developing nations, which have, let's face it, been flooded with Chinese exports and excess industrial capacity. They are also saying we can reciprocate by you selling your products into China. We will promote these kind of programs in 5 or 6 different countries every year, and then renewed every single year. So essentially, this is a big push by the Chinese. They have to import more to alleviate that record trade surplus that they're likely to post again this year. But part and parcel with that is also boosting domestic consumption. Those goods have to be bought by people here in China. Households need to play a bigger contribution to national GDP. It's right around 40% now. Some say there needs to be a target of around 50% contribution to GDP by Chinese households. So lots to chew on here from Li Qiang, except it's not necessarily new ground. He is reaffirming what China has been saying, especially coming off that very high-profile trade truce between Xi Jinping and Donald Trump last week in Korea.
Steve, thank you for the summary there. Stephen Engel, our Chief North Asia correspondent. In fact, just coming up here in the show, we'll try and unpack really what that means, that path between where China is currently and how they get there with Goldman Sachs under Tilton. In fact, on the back of the fourth plenum and the readout there, they actually upgraded their growth forecast for China to quite a bit, in fact, further out, even more so, going into 2026 and 2027 to 4.8%.
Yeah, I think some of the big revisions were one of the biggest ones, I think, in a decade. I think since Andrew Tilton actually worked there. So certainly is one to watch and to talk a little bit more about the rationale behind that forecast. Take a look when it comes to markets, though. We continue to see that wake-up call from some of these Wall Street CEOs that happened at the HKMA yesterday seems to waken up the market on these frothy valuations around tech. Take a look at the Kospi. We're off the lows, right? But we're still talking about 4.5% or more losses here. Nikkei, as Dave mentioned, we've broken below that 50,000 psychological level. HS Tech Taiwan also seeing 2% losses. There you go. NASDAQ futures are down some 1%.
More context on this tech sell-off right now. Let's bring in our Asia Tech correspondent, Belle, here with us with a few reasons behind these declines. And maybe we can start with AMD.
Yeah, so we had their earnings out, and essentially it's really tough because actually they did well, but they didn't do well enough to impress the loftiest of expectations. And we've sort of seen this a few times because they had a beat for the third quarter. Their revenue projection for the fourth quarter as well is going to be $9.6 billion. The average actually was $9.2 billion. So you're ahead of the average, but the loftiest was 9.9. And that's the issue, is that they didn't reach that point. And so off that, there was a lot of questions that were fielded in the earnings call as well, and we'll get more details next week, but essentially concerns around how they're growing that AI business. I mean, one of the biggest deals we've seen recently is Oracle, and also the deal with OpenAI, and they're planning to use AMD chips for that data center build out. Obviously, analysts want to see more of that. The PC business, actually, the processor business, is actually doing better for AMD instead of the AI server business or the AI chips that are used for AI accelerators. But essentially, the hope here is that Oracle, or AMD rather, can crack NVIDIA's dominance in the market. It seems like it's going to take a little bit longer than maybe some had wanted on Wall Street.
All right, Annabelle, thank you. Annabelle Jewelers there. Of course, it wasn't just AMD, it was also Palantir as well. That really kind of led to that sell-off here. We got some breaking news now when it comes to New Jersey and that gubernatorial race there. According to the Associated Press, the Democrat Sherrill has won that governor race here as well. So we've already marked Virginia, another Democrat that has won there as well. So that's what we have in the latest. We'll bring you an update on, of course, those U.S. elections, the off-year elections coming up as well. But yes, there's a lot of questions about what this means, right? I mean, this is the first time in terms of what voters can actually vote on whether they can show their contentment or disappointment with President Trump ever since he took office. And this has big implications, of course, for the midterm elections.
Yeah, the first ballot exercise since, of course, he took back the White House. And I guess maybe just on the issue specifically to what Yvonne was just mentioning there and what people are voting on, for example. So politically moderate former Navy helicopter pilot, of course, Mikey Sherrill here, campaigned on things like affordability amid voters' fatigue with high utility bills, for example. Maybe some of a snapshot there of maybe what won this for them. Plenty more ahead. This is Bloomberg.
Some unilateral and protectionist measures have had severe impact on the international economic and trade order, disrupted the world economy, and brought great challenges to the development of many countries.
That was Chinese Premier Li Qiang speaking, in fact, just a few minutes ago, I believe, maybe still is, at the ongoing China International Import Expo in Shanghai. That really goes into, and you're looking at on your screens, these revised forecasts, plural, out of Goldman Sachs. It's the same theme that they're doing in China, of course, talking to the trading partners. The theme, of course, of the conference itself is on external trade. And this really comes on the back of the fourth plenum and the readout there and the upgraded role that China has now put things like advanced manufacturing, that sort of thing. So Goldman came out shortly after and said, you know what, growth forecasts need to be bumped up, in fact, when you look at these things further out there.
Yeah, let's bring in, of course, Andrew Tilton, Chief Asia Pacific Economist at Goldman Sachs. And, of course, there on that revision. I mean, these are quite a big jump from what you had previously. What's behind it, Andrew?
Yes, these are a big increase in the forecast over the next few years. Really three things behind that. First, we've had better trade momentum year to date than even we expected, and we thought we were reasonably optimistic. Second, the five-year plan really emphasized continued focus on manufacturing, technology, exports. So policymakers clearly want that to remain part of the growth driver over the next several years. And then third, of course, we had the Trump-Xi meeting, the reduction in U.S. tariffs that was confirmed today. And frankly, we think it's less likely we'll see tariff escalation both by the U.S. and other countries, in part because China's demonstrated some leverage with its rare earth export controls. So that also should give China a slightly better export runway in the years ahead.
I think, yeah, you're right. It lowers the probability of tariffs coming back up because of that, that ace that they have. To help us understand this, so the next 3 years, would it be accurate to say, based on the information now, that exports will lead Chinese growth over the next 2-3 years?
We upgraded our export forecast from about 2 or 3% volume growth a year to 5 to 6. So yes, that will continue to be an important driver.
Yes.
That still marks a slowdown from where we've been, and we've had an extraordinary growth in exports over the past couple of years.
Yes.
But we just think that slowdown will be more gradual than we did before.
And when it comes to boosting consumption, I think they mention it, but the way that the growth model they're looking forward to is really kind of, they're relying on this whole manufacturing, advanced manufacturing. It's going to lead to them to be a tech superpower in a way that's going to boost profits, widen the tax base, and then boost up incomes, right? And this whole kind of new quality productive forces, how do you think that's going to work?
Well, there's some extra benefits to being a manufacturing superpower. Of course, as you mentioned, you have the direct benefits in terms of growth, investment, and some employment in those sectors. But then you get security benefits on the side in terms of areas that we can leverage, potentially things like the rare earth export controls that have already been announced, obviously spillovers potentially to other things like defense that could be relevant. And policymakers continue to emphasize self-reliance. They want to rely less on imports or key technologies from the rest of the world. So manufacturing is really at the hub of all of that, and continues to be a huge focus. Consumption is a nice to have, but maybe more of a nice to have than a need to have from their perspective.
Interesting. In previous years, the manufacturing base, and I think when I say previous years, you have to go somewhat back, really benefited the likes of Japan and Germany, capital goods exporters to China, for them to be able to base. And you mentioned self-reliance. Do you think we'll see less of that specific trade flow from those capital goods exporters? Are they going to produce most of that themselves now?
That's the goal. There'll probably still be a little bit more imports in a few years from now than there are today, simply because China's a growing economy. It's growing faster than the rest of the world, or likely to, and some of those exports will embed imported components. So it'd be hard to see export growth at that pace without any increase in imports. But policymakers definitely want to avoid a over-reliance on any one country or company outside of China for key machinery or other inputs.
But they already are exporting, cheap goods into other nations that are already, in some ways disrupting their domestic industries. I mean, are you expected to see, this growth is going to continue in China, but at what cost, right?
That's a very important implication for other economies, both those that directly compete with China for exports and those that don't. For other mid to upper income export-oriented economies, they may face even tougher export competition from some of the top Chinese firms, so they'll find it more difficult to grow. I'm particularly thinking of a few economies in Asia. It could be places like Korea, some places in Southeast Asia, but also Europe and Eastern Europe. Those are places that we find have the most overlap with Chinese exports. I think in other countries there are definitely benefits from getting cheaper Chinese goods in terms of lower inflation and better real consumer purchasing power. But then there are also spillovers to the local manufacturers. Will they face a tougher environment and have a harder time growing?
With the upgrade that you guys have put into next year, the year after that, I mean, the other side to that, if I could ask you about those other economies, is it too early, or do we have enough information now to? Would you be able to downgrade then growth for those economies? Like, do we have enough information? Because it's not purely zero sum, to your point.
It's not purely zero sum, but there are potential drags on other export economies. Some of those, I think, to varying degrees are factored in. And to some extent, as you noted, we'll have to see how this plays out. I mean, it can be very specific to particular companies or technologies. If foreign companies remain in the cutting edge, say in the AI space, where the most advanced chips are fabricated in Taiwan, and where you have high bandwidth memory coming from Korea, if to the extent that remains the case, those will be important growth drivers for those economies. But to the extent ultimately Chinese firms are able to move into those areas, there could be implications for growth outside of China.
Okay, hold on a second, Andrew. We've got some breaking news when it comes to this kind of off-year election day that's happening in the U.S. in several states, and we're getting more news now from the state of New York. So this is according to the AP that Mamdani, this is the the Democratic nominee that has won the mayoral race in New York City. This was highly expected. He basically has led most of the opinion polls, if not all, and has narrowed of late, but the outcome certainly has been now confirmed. Certainly this is going to be a big one here when it comes to the Democrats, and really having a lot of national importance, this mayoral race in New York City, and this could be really the bellwether to the future of the Democratic Party.
Yeah, we'll see what this means, and certainly this is the first tangible set of measurable progress following, of course, elections last year, this time last year almost, and going into the midterms, of course, which will be taking place almost this time next year.
Yeah, so certainly that's one to watch here this morning, of course, and of course we'll watch more from details of other states that are happening, and their voting is underway here this evening in the U.S. as well. Bring back Andrew Tilton. Given the fact that you have these rosy forecasts for 2026, 2027, what does it mean for the policy side of things? Are we likely to see less policy then and stimulus?
We think we'll get a little more policy easing in 2026 because, again, so much of this year's growth has been driven by exports. We're continuing to anticipate a boost from exports, but not as large as we saw in 2024-25. So policymakers will probably need to do a little bit more to support consumption. This could include, more funding for the social safety net. It could include measures on housing, although we don't expect to see some sort of large-scale housing bailout. We expect policymakers to largely, watch and just avoid, a sharper, further slowdown. One of the important sub-themes here is that the drag from housing is diminishing. So the housing sector is still declining, but at a slower rate. And so the negative effect of that on growth is going to be diminishing over the next few years.
Okay. How do we look at the wealth effect, though? I mean, from a mathematical perspective, it might be mattering less.
And you're not seeing it in the equity market. It's not really transferring that wealth either.
No, not at all. So I'm wondering, if, from a policy perspective, how did they approach just the debate on subsidies, for example, and those kinds of things?
I think you'd see a similar theme there, where you had huge declines in property prices in a couple of years earlier. Those price declines are still occurring, but at a slower rate. And also you have the equity market doing much better over the past year, so that's welcome. But equities are still a much smaller percentage of household balance sheet than housing. So this is partly offsetting, but we haven't really seen a big net positive household wealth effect, at least not yet.
Andrew, great to have you. Andrew Tilton there, Chief Asia Pacific Economist at Goldman Sachs. We got plenty more ahead. This is Bloomberg. All right, we are bringing you live pictures in New York City here right now. Of course, celebration is underway where the Democratic nominee, Zhang Mamdani, has won in that New York City mayor race. Let's bring in, of course, and it really does complete a winning night for Democrats as we talk about what's happened in New Jersey, in Virginia as well. Let's bring in our Bloomberg Balance of Power co-anchor, Joe Matthew, joining us in New York. Joe, give us the latest.
Yeah, it does appear to be a sweep here for Democrats this evening, at least in the three major races that we have been watching. When we spoke earlier, Virginia had been called already for Democrat Abigail Spanberger, the new governor. Then New Jersey followed just a short time ago, Democrat Mikey Sherrill. The race called for the next governor of New Jersey. And a pretty remarkable spread here, with Mikey Sherrill beating Republican Jack Ciattarelli by well more than 10 points, 56 to 43%. And now in New York, not a surprise to see Zoran Mamdani win, but it is a bit of a moment here to see it called so early. And by the way, actually a more narrow gap than some of us expected and what the polls were showing. Mamdani with just over 50% of the votes, and Andrew Cuomo topping 40%. He's got more than 41% of the vote here. Republican Curtis Sliwa with just over 7%, remembering that Donald Trump told Republicans to vote Cuomo, even though he's actually a longtime Democrat running as an independent in this race. The idea was to do anything to beat Mamdani, but that, of course, was not a successful endeavor. And Donald Trump now has the foil he was preparing for, a man who he calls a communist, a Marxist, in fact, a self-described democratic socialist. Zoran Mamdani will be addressing a very excited and very packed room of supporters here shortly.
Yeah, absolutely. I think we were just showing, Joe, that watch party just now. Yeah. You can almost feel the exuberance that's taking place there, and the bliss in the room. So Joe, is there anything from what's taken place so far that, I guess, informs us of how the midterms this time next year are likely to play out, or is it too early?
Well, it's always early, and look, it's up to us here to try to figure out what of this night is actually something that we can extrapolate nationally, and it really might not be in New York. It would have been very difficult for a Democratic Socialist to win any of the other races we're talking about. And I'll note we're still waiting for results from California, where the Prop 50 redistricting effort is still undecided. But there's going to be a conversation in the Democratic Party about who's got the winning playbook here. Zoran Mamdani as a Democratic Socialist in New York, is that the new message for the Democratic Party? Or is it the moderate Democrats who won governor's races in Virginia and New Jersey? Maybe it's something in the middle. We spoke earlier today with the chair of the Democratic National Committee. Ken Martin spoke to the big tent and the fact that you need different candidates like these to win in different places. Downtown Manhattan's a lot different than downtown Richmond, or Trenton even, for that matter. So we're seeing a couple of new approaches play differently for Democrats, and they seem to be working. When you wake up tomorrow, you're going to hear a lot of people talk about how this was a check on Donald Trump. And in some cases, that's true. But there was more at hand when it came to the candidates and their local proposals in these three races than national politics. And that's what we'll be dissecting moving forward.
Yeah, we've gone through the three. Are there any ones that are still on your radar now, Joe, tonight?
Like I said, California is a big one, and we could even say that it's more important than any of the races that we're talking about. If this passes as it's expected, Prop 50 will allow California to redraw its congressional map as a check on the effort by Republicans in the state of Texas. And what's happening in California could also set up Governor Gavin Newsom as the Democratic nominee for president a few more years from now. You're looking ahead to midterms. A lot of people in Washington are wondering who will be the presidential nominee. And of course, it's way too early to tell that. But this is something that Gavin Newsom had to win for him to be taken seriously as a credible candidate moving forward. And it may prompt other states to do the same. The reason why this is so big is because the map that will dictate the midterm elections is being rewritten before our eyes this evening, and that will have a lasting effect nationally.
Interesting. Joe, thank you so much. Joe Matthew there, Bloomberg's Balance of Power co-anchor, joining us there in New York this morning. We got plenty more ahead. This is Bloomberg. One trading debut in Hong Kong today, not doing so well. We're talking about Series. Of course, this is the EV maker, Huawei partnered, one who has the most popular luxury car in China. So not the first day of school here. We're seeing the stock down some 5%. But Series President Zhang says the company will use funds from its Hong Kong listing to boost research, development, and AI. And is looking to enhance features that have already made it a leader in China's luxury auto market. Stephen Engel reports from the Series factory in Chongqing.
The speed at which upstart Chinese carmaker Series built its third and largest factory represents just how fast it's risen to the top of China's luxury EV segment. The Chongqing plant spreads across 1 million square meters, built in just 1 year, from breaking ground to start of production of what has been a groundbreaking 4-year-old tie-up with tech giant Huawei.
Okay, we're going to go get the president.
Which has its Harmony OS fingerprints all through these cars.
It's been quite a meteoric rise for the once small minivan maker Series with its Aito brand. This is its flagship M9, fairly large SUV that should be giving the established foreign luxury car makers like Mercedes and BMW a bit of a scare, actually quite a big scare. This car was the #1 seller in the luxury segment last year, beating the likes of Mercedes, beating BMW. So this is what the new luxury customer in China wants. High fashion, high value, high tech.
I think the Chinese EV market in general scares the dickens out of all of the foreign players that are trying to stay relevant here in China.
People likes intelligence, likes to play cars with mobile phones.
Series President Zhang says proceeds from the Hong Kong listing will be put toward further R&D in safety, automation, and connectivity, tapping China's own supply chains and homegrown tech, and offering gadgety perks today's discerning buyers demand.
Actually, our cars, you can drive to let's say a parking lot, to the elevators.
Get out and then...
You get out and you go and the car will find a spot to park itself. This is the new kind of luxury.
And while other EV makers in China are mired in a damaging price war, the profitable Series hasn't followed suit with its $70,000 Aito M9.
We haven't lowered a penny.
Aided by the fact most in China see Aito as essentially a premium Huawei EV without the Huawei badge, an advantage it might not otherwise have in Western markets because of U.S. sanctions against Huawei.
We partnered up in the difficult times. We're going to help each other.
They are probably the most successful player within the luxury market, allowing them to stay above the fray in the ongoing trade war.
In large part due to advancements in physical AI. In the factory, where more than 3,000 robots can help churn out a car every 30 seconds. And beyond the dash, where Series says Harmony-assisted driving rivals Tesla's latest FSD, at least in China, where LiDAR is standard and local road training has a head start. Nevertheless, authorities are dialing back industry promises of full autonomy until safety is assured.
Human drive plus assisted driving system together is the best solution.
Along with, just possibly, a humanoid sidekick of a different kind.
If you have a maid or you have a servant, it is luxury. But in the future, when intelligence redefines this luxury, it's going to be a robot.
A butler bot assistant riding shotgun may be the next luxury must-have. Stephen Engel, Bloomberg News, Chongqing.
Fantastic package there from Steve's, and hopefully, you want the dad joke, Yvonne?
Always.
Okay, so hopefully the declines today in series are a one-off and not a series of future declines.
Okay, Asia Eco to tell you about. We're still waiting for some inflation numbers coming out of Thailand and third quarter GDP in Indonesia, retail sales out of Singapore as well. We did get those Hong Kong PMI numbers that were actually quite strong for September by 51.2, and really pretty decent numbers when it comes to the rating dog private gauge numbers out of China too.
Yeah, so it really underscores the comeback of services, right? So when you look at Hong Kong, for example, the GDP print which came out, which really beat estimates, number one. Forward-looking indicator of this, highest level of 2025 so far. And then the PMIs from mainland China. So we now have a complete set for October. So following the miss on the manufacturing side, on the official front, services seems to be standing out as one that is positive. And as you can see, 52.6, and non-manufacturing still holding on the official side of numbers, about 50 here.
Yeah, so I think a solid improvement when it comes to domestic demand, right? When you talk about holiday spending and travel by some of these households now, and really kind of insulating the industry with this kind of deepening economic slowdown that you're seeing, that at least you're seeing some green shoots when it comes to domestic spending. We'll see if that continues, if that strength can continue in the months ahead, but certainly that is going to be a key focus for policymakers, whether they can actually unlock more demand, of course, from consumers.
Yeah, which is what Andrew Tilton from Goldman underscored for us just a few minutes ago. From Eco, let's turn our attention back to markets and really what's still a very bad day. Although we're coming off lows, as you can see, we were down as much as 6%. We're now down just 4%, which is quite a good one following where we were just about an hour back. We spoke with CLSA earlier, the deputy head of Korea Research, Jongmin Shim, about what's really going on in Korea today. Have a listen.
Beginning of the serious correction. I think this is a healthy correction, I would say, because there have been, ongoing concerns on the AI, and Kospi obviously have done a very strong performance in October, and with that we have had the APEC summit last week, which removed the uncertainties around the tariff concerns. So I think overall, there's lack of catalyst in the near term, whereas all the positives were well reflected and known in the market.
So they don't seem that worried. Watch for, I think, NVIDIA numbers are the next one to watch here, right?
I think in a few weeks' time.
Yeah.
So, in the near term, maybe is not going to be that catalyst on whether it is time to actually buy or in this dip or whatnot. But you take a look when it comes to NASDAQ 100 futures, right? They continue to be down about 0.6%. We come off some of the initial lows, so maybe things could look a little bit, relatively speaking, better when Wall Street opens up on this Wednesday morning. But as Mark Cranfield said, initially it might actually get pretty ugly at the get-go.
Yeah, especially in Europe. So we need to get through the next few hours. 1% declines there. That's it from us here today. This is The China Show. We'll see you all tomorrow.